Well, DLF witnessed record gross collections in third quarter, 5,100 crores. They've also, of course, turned gross debt-free for the first time since the IPO. Company believes it will achieve their FY26 bookings guidance of 22,000 crore rupees. Ashok Kumar Tyagi is managing director of the company. Is with us. Mr. Tyagi, good morning. It's always a pleasure to see you on CNBC-TV18 and speak to you. Prashant this side. Numbers are I don't think there were any new launches, etc., which were expected in this particular quarter. But more and more increasingly, we are hearing chatter that in the core market that you operate in, which is Gurgaon, the sentiment actually is quite poor. Noida is still holding up pretty well, but Gurgaon as a market seems to be poor. I mean, in terms of your project, right, premium project, Dahlias, I don't think there were any sales which came through. Do you treat that as a slight negative? And just your thoughts on what we're seeing in the NCR's market.
Okay, so good morning, Prashant. So as far as Dahlias is concerned, I think we also articulated that on the analyst call. We've had a slight redesign in the layout of the product, frankly, to give the customers an even better experience. And that in a post-RERA, if you do even a slight tweak, you have to go through, getting approval of the customers to whom the bookings have been made and then going back to RERA. So actually Q3 was a pause on Dahlias sales on account of the slight redesign that we had done in the product to basically give our customers an even better layout and even better design. So really Q3 was just a mechanical pause, if you will. And Dahlias sales have resumed, in Q4 as we speak.
Right. And it's
a broader question, Prashant. Clearly in the markets that we operate in, which is basically the luxury market, we are not seeing a slowdown, especially for the credible players. You can see, across the country, you can see also that the credible players, and which is not just the listed, but the bigger, more institutionalized players are continuing to sell their stuff, especially at the upper end. What's happened is clearly that in the last few quarters, I think, buoyed by the success of the overall luxury market, some of the new entrants had also sort of, moved into the luxury market or graduated from the mid-income to the luxury market. And maybe the customer is becoming slightly more discerning in terms of, sticking to the tried and tested and the better developers versus the new ones. And maybe, I don't speak for them, but maybe some of them are facing some degree of headwinds in the market that they're operating in. But frankly, for us, be it Dahlias, be it the resale markets in our earlier products like Privana and Arbor, be it hopefully our coming launches, I think we are continuing to see reasonably strong traction.
And you've restarted sales. You said it's a mechanical pause with regards to Dahlias.
Absolutely. The Dahlias sales have resumed.
Since then, you've had good inquiries, perhaps a sale or two as well?
No, not a sale or two, slightly higher than a sale or two.
Okay. It's already happened and it'll show up in... Okay.
Of course. It will show up in the Q4 numbers. Absolutely.
Do you want to give a number? Because I think the last update was there were 420 apartments in Dahlias and 220 were sold. How many more?
So Rima, good try, but mid-quarter I won't give an update, but quarter and I'll give you, and definitely that the number will be in a good double-digit number.
All right. So now you've turned gross debt free for the first time since your IPO, and you're sitting on more than 11,000 crore of cash. What is going to be the priority now? Are you going to get more aggressive in terms of land acquisition? Or do you want to stay debt-free permanently? How are you thinking about this metric?
Okay. So clearly, the intent is to stay gross debt-free. It's taken us 15 years plus to arrive at this, at this goal. And frankly, we don't want to re-leverage ourselves all over again, So that's the intent. Currently, Rima, of the 11,000 crores cash that we have in our books, about 10,000 crores is locked in the 70% RERA account, as we have articulated repeatedly. So clearly, our free debt, as we speak, is more in the range of 1,500 crores. And I think this will keep on growing. The good news is this will keep on growing. And fiscal 27-28 onwards, I think we will enter the virtuous cycle of the current generation of launches, which has contributed to this 11,000 crores of cash surplus, A, growing, and B, hitting their OCs and coming out of RERA. So I think from fiscal 27-28 onwards, I think you will really have significant chunks of disposable cash on books and in hand. And I mean, our intent continues to be that we'll broadly split it across, the three segments. One is clearly continuing improving shareholder returns. I think our track record in the last 4 to 5 years has been to increase dividend every single year, and I think we hopefully will continue to be on that trajectory. The second thing will be that, yes, part of this will get reinvested back in growth in terms of acquisition of strategic parcels wherever we feel, that they add to our value. And C will be clearly that I think over time, as the cash surpluses increase, you will hopefully see an increasing proportion of strong financial incomes as well. But as I said, I think that this cycle will really kickstart fiscal 27-28 and then hopefully keep on growing from there.
All right. Hi, Mr. Tyagi. Good to see you in. I was looking at dividend payout ratio. I think it's been close to around 35 to around 45% over the last few years. And now your net cash for, after many, many years. So good on that. And just to reconfirm, you're not seeing buyer fatigue, right, in the NCR market?
So, Nigel, again, it's too broad-based a question. But in the segment that we are operating in, for the better developers, no.
Okay.
But clearly, I think on a wider basis, maybe you would see some. More importantly, also, as far as the buyer fatigue is concerned, actually, there's a flip side to it, which is that the large chunk of market, which is, the mid-range or the slightly premium market, 2 to 3 crore ticket size, actually, there aren't enough products in the market for that, because everybody's trying to do luxury now. So I think there's actually a significant untapped demand there as well, which over time, builders who have those land parcels and who believe they can deliver those products productively and economically should tap, frankly, because that's a huge market, which actually is fairly untapped because a lot of players who are playing in that market have actually tried moving up.
Okay. All right. Mr. Tyagi, you've already done ballpark around 16,176 crore rupees in the first 9 months.
Yes, sir.
The run rate demands that you do close to around 6,000 crores odd in Q4. In such a volatile sales environment, you think that's possible?
No. So two things. The volatility is because, if you look at Q3 last year, our Q3 last year was, I think, historically the best quarter by anybody in the industry because Dahlias was launched. So actually, a large part of this, Nigel, is launch-driven, really. But as we have maintained that we had indicated a sales guidance of 20 to 22,000 crores at the beginning of the year, we believe that we have, the products right now to be able to reach those.
Okay. You've also entered into senior living care, and I think it's about a 2,000 crore project. Can you tell us what the timeline of realization of this is going to be, and are you planning more such senior care living projects? How big is this opportunity?
So this is I think about about a 2,000 crore project, as you mentioned. We are still in the process of receiving its final approvals, and in the next couple of months we should hopefully be bringing it to the market. We believe that there's a strong underlying demand for luxury senior living, clearly. And let's see how this goes. If this goes well, maybe there'll be more in the future. But this is the first one that we are getting to the market on this.
Just one last question, Mr.
Yes,
Tyagi. Is Noida holding up really well as opposed to Gurgaon?
No, I don't think it's a question of opposed to, but some of the recent launches in Noida, especially again in the luxury segment, have done well by if you go by media reports. So clearly there, after a long period of lull in Noida, there is clearly a renewed interest that the customers are getting in Noida. And as the old generation of builders has sort of faded out and some newer builders have come in, I think Noida is clearly showing some signs of interest. And in the last year and a half, some of the recent launches have done well.
Yeah. DLF is, of course, is old but also new. And I think one of the only legacy players which has reinvented itself has done very, very well in that sense. Mr. Tyagi, thank you very much for joining us. Great speaking with you. Appreciate your time here on CNBC-TV18 and good to get that perspective.